Hello guys, hope I am on time today. So the topic of today is working on trends. We have seen a lot about trends, but still a lot of people, they can't handle the trend. The idea behind is hello Rahmatullah, how are you? Hello Clown with Twitter account, how are you? Hello Wise Man, thank you for coming, all of you guys, as always. So Hero Diron MC, thank you very much. Yes, I am very good. So Djellala, Clown with Twitter account, my name is Kareem. So Djellala is just the business name, okay? So just not to be confused. So my name, in short, it is Kareem, okay? So the topic of trends is a very, very tricky one. That's why I made the whole training level 7 about it. So it's not easy, okay? It's not as what they say, that you should follow patterns and you should follow things. So let's see what Clown with Twitter account said. Don't you deny that the patterns are support and resistance line? No, these are not patterns. These are just criteria that the people use. But the people when using patterns, they are using hundreds of patterns they read in books. I have checked before some books, and they make the trader or the swing trader more confused than before, because using all that stuff, okay? It means you will be following what the traders are doing, but each time the traders, it is not because they do it by purpose. Now, for example, to make you understand this, it's very simple. You can't find two stocks with similar, same volume, same pattern, okay, in the stock market. You don't. So even if they are two stocks with the same price, the same industry, okay, it means they are doing the same thing, but in terms of trading, you find that they are different. Now, why is that? It is just because the traders who are in the first stock are not into the second stock. So let's say you discover a stock, but you don't discover other stocks the same as this one. And even if you discover them, you can't buy them all. So that's why we have, when you see the chart, you will find not just hundreds, but you find thousands of patterns in the trend. Okay? No, see, Clown with Twitter account, don't think that that Warren Buffett is stupid to show what he is doing. He will never show anything, okay? And understand that Warren Buffett, all his money, I showed how he has done his money. It's not because if he uses a 1 month low or 2 month low. He doesn't believe in this time to buy. Okay, because he buys a lot, okay, he doesn't care about this 1 month or 2 or 6 months. He doesn't care about timing in the market, as we said, timing. He doesn't look at a support line or a resistance line or whatever is the price he buys, because when he buys, later all the people who knows that Warren Buffett he buys, they bought after him. I will give you an example. Clown with Twitter account. I will give you an example that Warren Buffett, because he is well known, I will tell you something, maybe you'll be astonished. Okay? After the crisis many years ago, okay, with Bank of America, okay, now he decided to buy Bank of America. Why? Because the government said that it will help Bank of America. So because he knew, there are something that he knew, it is not, when you see it, it is not for the common people to understand. Okay? I will tell you something, because for me, one time when I see that he wants to buy, no, he already bought. It means when he say I will buy, it's already he bought, and it's after a few months or 1 year or 2. He will not tell you when he buys, because he is not stupid, because all the people will go to buy with him, and he doesn't want that all the people make money like him. Okay? But to make you understand, Clown with the Twitter account, about this situation, okay, I will tell you about Bank of America and I will explain. At least if you go to the history, you will see what's going on. For me, when someone said I bought Bank of America and he is well known, what do you think the other people will do? They will buy. This is an advertisement. Okay? This is an advertisement, which is a free advertisement. He doesn't pay money. He doesn't pay other people, like analysts, to say that Bank of America is good. No. He said it by himself. And since he is a well-known person and he has big money, they understand that Bank of America will go up. I will show you the chart to see how the big guys are moving. Okay? So it's not 1 month down, 2 months down. He doesn't care about the month, about the price, because when he buys, advertisement will make him money and his name, because he's very well known. Okay? And all the people respect him. And most of the time, it's the public who just want to buy for sure that the stock will go up. This is why the people, they don't want to risk their money. Okay? So I will just show you with the chart. Let's see with the chart, with explanation first, just to understand how it's going. Okay. Now, let's see here. I will just give you an example. Now, Bank of America was going down. I think it reached $3, I guess, if I am not, if I am sure. Let's see. $2.53. $2.53. I think it is this one. $4.92. I am not sure when he bought it, but it could be in 2009 or 2011. So it reached 253 in 2009. 253. Okay, here. I just make sure. It's 253. Now what's this year? It is 2009. After here 2008, when the stock market goes down. This is the crisis, if you can remember, of the financial institutions and banks when they fall down. Okay, so in 2009 it goes to 253. Now here the government, or the federal government, announced, because Bank of America was going to bankruptcy. It was going, because the stock reached $2.53, so it is too low. Okay, so the government announced to help. Okay, I don't know if Warren Buffett make a decision with them, and he wants to help also. So I think the government was to put money into this, and the stock goes to $7. I think Warren Buffett bought it at 7 when he saw that that the bank has put money. It means the government has put money here to help. Okay, he put money. Now, after a few years, after $7, the stock goes down again to 4, and from 4 it goes to what it is now. Okay, so when Warren Buffett said that he bought it at 7, he has already bought it. Okay, it means it's already done, and he waited 1 or 2 years until the stock is going up, and now is $28.99. Okay, so 28.29. So how much he made from Bank of America? I think he bought it at 7. Now he is making 400% in these years, from I think 2010 or 2011. Okay, this is the year I think he bought the stock. Now Warren Buffett, he doesn't add, or because the price goes down or goes up, he just make very big transactions inside. Okay, or he can buy little by little, but he is not waiting for the stock to go down and he buys, because whenever he begins to buy, the stock will be going to go up, because he bought a lot. And a lot of people, they come after his announcement to buy. Okay, so this is what happened. So this example, I just show you how the big guys are buying. They don't buy because of the price, if it is $2 or 5 or 7 or 6. But Warren Buffett left the whole market going down. He doesn't care that the market is going down, and he lost a lot of money, so he doesn't want to put any money until things stops. Now, when things stop and it's going up, it means there is help from the government. He wants to see what America will do for the stock market, because the government, or what we call the federal government, will do something to change, because the people, they have lost too much money in 2008 and 2009. Okay, so the people, they lost money, so the government will put money into the stock market in order to make it go up again, and then the people, they come and they are very happy and they begin to invest again. This is what happened 2008, 2009. Understand that these 2 years where the stock market goes down, and 2010 things begin to change. So this is what really happened. Okay? Now, hello, Jeremiah Walters, how are you? Jeremiah Walters said, I'm going to sell aerospace and defense at a loss, and the XLF a loss. What do you think about that? Now, Jeremiah Walters, is it this stock XLF? Let me see. Okay. Jeremiah, you said you are going to sell aerospace and defense at a loss. What stock? Is it an ETF or is it a stock? Because I check XLF. XLF, it is financial. It is not aerospace and defense. So this is a financial ETF. It's not aerospace ETF. So Spider ETF. Spider. No. Listen. Jeremiah. Please. Give me the symbol of aerospace and defense first, because I can't. You give me too much things. Give me first by first. The first thing you give me, what is this aerospace and defense that you want to sell? What is it called? XL. Hello, Aura Phronobis, how are you? I'm still waiting, Jeremiah Walters. Can you give me the symbols from the aerospace and defense? Don't give me just an ETF of Spider ETF. Which Spider ETF? There are thousands of Spider ETF. Spider is just a name of the family of ETFs. So which one? The XLF, it is financial sector. It is not aerospace sector. Now, oh, okay. It is XLF and PPA. Let's see. Okay. So you said XLF and PPA. Now let's begin with the PPA, which is the aerospace defense ETF. Okay. Okay, let's see. Now, this is 5108. So, PPA, which is aerospace and defense portfolio. It's a portfolio where we have stocks in aerospace and defense. Okay? Now, it's going down here in February, going up, going down, going up, going up. Okay. Now, my question is, to you, since you are doing this. Is this a trade or an investment? Okay? This is the first thing you should ask yourself. Is it an investment or is it a trade? If it is a trade, you can see, you can exit with a stop loss, and you should make a plan. Okay? So Jeremiah, you should understand this. You should make a distinction about two things that you should make sure you understand. Cloud with Twitter account, you say, Kareem, how you plan for your trades? Please let me continue with Jeremiah Walters first. When I finish, I go to you. Because I'm still explaining to him. So, Jeremiah Walters, if you are investing into an ETF, you should at least wait 1 year. Because how can you evaluate your investment in 1 month or 2 or 3? You can't. And as I showed you right now, the portfolio is like the market, is going into a range, going up and down, up and down, and up and down. There is no new information in the market. So for me, if I were to do a long investment, I will not touch it until I am sure that the market is against me and this portfolio is not doing well. But right now, the market is all into trading into a range, going up and down. So there is no information from the market where to go. Okay? So this is for aerospace and defense. And you have gone and choose an ETF of a portfolio. You did not go to index. Now, right now, Jeremiah Walters, I will show you the ETFs of the index of the industries in aerospace and defense, because this information is better than what you did. Okay? Now, let's go. So let's go to aerospace. So look here. Look at this aerospace. This is aerospace and defense products. and services. This is an industry. And the other industry is aerospace, defense, and major. So they are both the same thing. Now let's see some stocks, what they are doing. Okay. There are some stocks that are doing better than the industry. I'm just looking at the stocks. Okay. So, this is my opinion, Jeremy Walters. Okay. So, you took this PPA, which is an ETF. This ETF, it is not following the index, the two industries of aerospace and defense. It's another ETF. It has some stocks that the manager has chosen are really the same as the index and what it's doing. Okay? So maybe this guy who is choosing, he chose the worst. He chose the worst stocks, because I just see, I find other stocks are doing good, better than this PPA. Okay? Now, the second thing, XLF, let's go to it. Now, XLF, if you can see, it is a financial. So financial ETF, it means it has all the stocks that are belonging to banks and the other stuff. So as you can see, they are not doing that good. But still, they are trending into a range. It means if they go down, this ETF will be an exit. You should exit. You must exit if this ETF goes down. Now, if it goes up, it means it will be very good. But right now, it is trending into a range and it is at the bottom. Okay, so it's up to you. I don't know. As you can see, Jeremiah Waters, I don't know if you are following my strategies, yes or no. Because if you are following my strategies, you can send me an email. I can give you more information if you want either to invest or if you want to do a trade. Okay? So both of these two are different. But I don't know where you bought these two ETFs, and what is your intention? Are you planning to invest or are you trading? Because trading and investing, it's totally different. It's totally different. The goals are different. When you invest, you should wait at least 1 year. At least 1 year to see what's going on. But you can't just buy an investment 1 month or two and then you sell it. This is not investing. This is just a trading. And then if you trade, there should be momentum. It means where you buy exactly, especially if you follow my strategies. We have specific thing to buy. We have specific thing to sell. So we don't just buy because we see that it is good. No, there should be there should be what we call criteria, and there should be a momentum when to buy. Okay, so okay, so this is just you said ETFs, investment, stocks, trades, or I am wrong. No, see, Jeremiah, you should understand what you are doing. Are you doing investing or are you doing trading? I'm not speaking about ETFs or stocks, they are the same. But you, what is your goal from buying this ETF? Is it to trade or is it to invest? When you invest, you should look for the long run, for 1 year, 2 years, 5 years, 6 years. This is an investment. Because you see that these stocks, industry or sector will be going good in these 2 or 3 years. Because you specify which sector. Okay? If your sector is going down, all your investment will be going down. Okay? So this is just to understand. To understand the no, excuse me, clown with Twitter account, no. It is not because there is a war the aerospace will go up. No. It has nothing to do with the war. Because if it is like this, it will be very easy for every stupid person to make investing. No, it is not. I will show you years when there is no wars and the ETFs are doing well. Right now there is no war and it is doing well. No, it has nothing to do with war. Don't link stocks with national or international news, because you will mess up all your investment. Now, you said, for example, PDI is my best 10. So let's see. PDI. Okay. So I don't know where you say PDI is my best 10 plus dividend. No. When did you buy this stock? It's going up, but it is so slow. So, and you say plus dividend. Depends. It depends how many shares you bought. Because dividend is always a small percentage. Okay? And then you say sold Macy's before it went down. Made back again. So let's see Macy's. Yes, it is still. We don't know what will going on, but it's still going up right now. Yes, we have a day where it goes down. We don't know what's the problem, but it can go up again. No problem. So let's go and check the other guys. Now you said, Clown with Twitter account said, Kareem, how do you plan for your trades? No, it doesn't mean. I plan each trade by itself. Now each trade has some money. Now I plan the trade. It means I search for stocks, or if I have a portfolio full of stocks, I can choose from, or I search for stocks daily. When I find a stock, I know how many shares I want to buy, what is my position, and then I do the trade and I put stop loss. Now, if the trade is good, I will wait on how many days, weeks, or months it will stop, and then I exit. Now, each trade is separate from the other trades, because each trade has some money for itself. And during the year, I will have a good winners. Those good winners, they will lift my account very good, and they will cover all the losses that I have in some trades, and I will make a profit. This is how I always work, and this is the probability that I am using, which is a training level 5. How to make money from stocks. This is what I use. And if you see training level 5, you will find the logic and the probability that it is based on math. It's not probabilities as you can see in algorithm, because for me, I don't use that. It is a very, very simple calculations. Now, if you understand how I operate, okay, you will understand that making the money is just a matter of time and a matter of how much money you have. Because momentum, all the stocks have momentum, but it comes not each day, but each stock, the momentum comes in one day. You can buy it later, yes, but it's preferable to buy it when the trend is not seen yet. Because when the trend is seen, all the people want to buy a winner, and this is stupid. Okay? This is stupid. This is what all the people do in the market. When someone shows you a winner, you psychologically, you want to be with the winner, but the problem is that you are not a winner, because the stock will be going down soon. The trend already has finished. So you come late. It's like a party. Okay? The party begins at 8 o'clock. It finishes at 2. I will just make an example with a party and with a trend. At least you will understand. Okay? So here is an example. It's a very simple example. Okay? Now, the party begins at 8 p.m. It goes to 2 a.m. This is just a normal party that you do with your friends. Okay? It's like a trend. Let's say here is January. Here is June. This is the party for the stock. Okay? Here. It begins here, and it begins here, and it finishes here. Okay? It's the same finish. Now, for us, we come here. In the first minute, we are here in the party. Here, the first daily candlestick, we are here. And then we stay until the stock collapses. And then we exit. Now, if you are going to the party, you come at 8 sharp, or after 1 minute, let's say after 1 minute sharp, you come at 8 and you go doing your party until 2 p.m. and then you go home. Go home, because your friend will ask you to leave. It's finished, the party. Now, in the market, what did happen? It's this here. In May, the mutual fund and the analysts asks you to buy here. In June, at the end of May, beginning of June, it means in the end of May. And they tell you the truth. They tell you, we have, the trend has, let's say, 75% profit. Let's say from here, from January 2018 to June 2018. Now, are you going to buy at the end of the trend? Or are you going to come to a party when someone else asks you to go at 1:55 a.m.? You are going to your friend and you knock the door and all the people are going home. So this is what I mean by to buy with the momentum. This is the momentum. It means you should be with the first. Okay? This is the momentum that I'm always speaking about and I'm always teaching. If you come at late at the end and analysts asks you to buy because people are selling at that time and the stock will be going down, and it will have a downtrend. So this is what I am saying about the momentum. Okay? Now, let's see. Clown with Twitter account said, defense are bad, it has to be a war crisis. Clown with Twitter account and Jeremiah Walters. Jeremiah, you have gone to an ETF. You haven't gone to stocks. In aerospace defense, there are good stocks to buy. But you did a mistake to go to ETF. ETF, it gives you a lot of stocks together. And what you choose is a managers who chose the stocks. But in real aerospace and defense right now, there are good stocks to buy. And it has been going up for 2 or 3 months. Since February, when we have the correction, there are stocks that are going up and people make a lot of money from them. The problem is that you don't know how to buy. This is your problem. That's why you select an ETF which has bad stocks and good stocks. And this, you get the average. Okay? So I will, I have explained this a lot of times, but it's always, since I am teaching you guys and giving you information, I always try to repeat the things until you understand it. So I will just give you just an example how things work. Okay? Now, so let's say this is the correction. Okay, still going down. This is what almost all the index are doing. Okay, so this is the index, what it is doing right now, and this is here begins February. Now we are at the end of June. We are here. So February, March, April, May, and June. Okay, we are in June 2018, and this is how the indexes, most of the indexes are doing like this. Okay, now you choose an ETF. An ETF, if it has all the stocks, it will be doing the same as an index. This is ETF. Now, an ETF gives you the average of all stocks, average of bad plus good stocks. Okay, just to understand. Focus, please, on this explanation. Okay, so now in real, there are some stocks in this, let's say in this aerospace and defense. Okay, this is the sector or industry. Now there are some stocks, they do the same as they go up and down, up and down, up and down, up and down. They are doing the same. This is the average stocks. Average stocks. Number one. Number two, there are stocks that has been going up, going down, but they mess up and they are going down. This is number two. These are the bad stocks. Now, there are some stocks that they go up, they go down, and then they go up. These are the good ones. Now, Jeremiah Walters, you have chosen the ETF here. You don't know exactly what are the bad. You don't know the average stocks. You don't know the good stocks because you buy this. You buy everything. That's why you exit, because there is no money in it. Now you tell me, Kareem, where is the money? The money is now in stocks. Now this, it could be good in the future, but we don't know if this will be going down or going up, this average thing. So we will see this in the future. This is, if you can, you put it as an investment for the long run, but you risk more and more and more. So either you find these stocks and you buy them, or you buy an ETF and you leave it for the future. You don't know. But there is a lot of risk here. That's why you exit, which is very good. But if you are going to invest for the long run, you might see other ETFs that are better than this, than aerospace and defense. You can see other ETFs. Okay? So this is just an explanation how I see things in terms of a trend. And that's why working on the trend, this is my subject of today, is the best thing you can do. Hello, sorry, I didn't see the other guys. Hello, Orap Pronobis. Hello, Cheaper. Um, let's say the other guys. So let's see what they say here. Jeremiah. Hello, Andy. Hello, Duna. Hello, Stealing Daisies. If I pronounce them good. How are you? Thanks for coming. I was just explaining to someone. So please ask your questions. I will go one by one. Now let's go for the last example of Jeremiah, and then we can go to cheaper. So Jeremiah said, I like egg. Let's see how this is stock. AIEQ. It's a new ETF, as I can see. Let's see here. This ETF, AIEQ, it's a new ETF, as I can see, 88. Be careful of this new ETFs. You know that ETFs are made each month, just to make sure to understand that this, for example, AIEQ is a new ETF because it doesn't belong to a group, to an industry or a sector. Understand that ETFs are companies that they make these ETFs. Companies specialized and they make these ETFs. They have many stocks or an index and they follow it. And they follow this index and they make what we call an ETF. So you will find thousands and thousands of ETF, and each year we have hundreds of ETF created. So the market is always full of these ETFs. Okay. Now Cheaper said, check out CAT. Looks to be in a strong support area in my humble opinion. Let's see, CAT. Now, see, you will never know. I don't like this stock. You see this one here. You see those. When it goes down, this stock goes so bad. I don't know if it is earnings or so. It crosses the line. It's going down. I have no idea about this. But the stock, you know, it was 173. Now it is 139. So no one knows where this will go. Okay. So it is not strong. It is not strong. It is very, very small candlestick. And it is not strong that much. I don't know. And Jeremiah said, CAT is a long way from the 20 average. Understand, Jeremiah, that we don't use averages here. We don't trade with moving average. Because a moving average is a lagging indicator. If you change the number, the line will change. So it is not reliable. So we don't use moving averages in order to trade. Why? Because they are lagging indicator. It means it gives a delayed information. And if things happen, this 20 will change, because you are always putting 20 days from today. The closing days from today, 20 days. But if you are tomorrow, you miss one, so you change. And this line will always change. If you put 50 days, it will change. If you put 200, it will change. And for us, we don't use averages. So Jeremiah, you should follow us. How do we trade? We don't trade as you trade. You think that you are using investing tool that some people use, but for us, we don't use it. Okay? So we are not using this thing. Jeremiah Waters, they have aerospace stocks. They have a lot of debt. This aerospace, no, it is not. Don't care about the debt. Care about the price. The stocks, I showed you some. They are excellent. But you have gone to the ETF. I'd explain to you. The ETF is the sum of the bad and the good. Because you don't want to change the winners. You are having the winners and the losers together. That's why. And understand that when we trade, we don't see the debt. Okay? When you see the debt too much is for investors. We are not investors. That's why your ideas that you have, it's not compatible with what we do. We are traders. Okay? And traders, we follow the price. We don't follow the news or fundamental thing or so whatsoever. We don't. Because for you, what is the most important thing? The most important thing is to make money. If the price is going up, you will be making money. The company has problems or has debt or has whatever it has. It's not important. Because we are not staying many years in this company. We are just buying the trend. When the trend finishes in 2 months or 6 months or 8 months or whatever, we will sell our stock. We don't stay all together. Okay? So have an idea about that. Now, a clown with Twitter account say Trump will send the airspace high or low. No, it's not. See, don't try to put politics a lot into Wall Street. Wall Street is not politics. Politics can influence the price, but not dictates the price. It's Wall Street who dictate the price. Okay? If a company is losing money, the stock will be going down. It's mutual funds who are selling. It's not a Trump who ask investors sell your shares because this company is bad or good. Trump has nothing to do with Wall Street, and try to understand that. Don't mix things and put politics, because if you put politics into the Wall Street, you will have all bad results. And stop watching too much TV. I'm telling you always. Because you watch too much TV, or everything will be, you will be always confused in your life and in your investment. Always confused. Because in politics, each one talks. especially analysts. Someone tells you to sell, someone tells you to hold, someone tells you to buy, and all they have an agenda and they work for someone else. That's why in order to become a trader, you should see the price. Don't look at the news or at the politicians or international economy or whatever, because you are just wasting your time. I'm telling you right now, I just go to aerospace stocks, I find good stocks to buy. I see them, you don't see them, because you don't know how I operate. It's not all the stocks are going down. Because you bought an ETF, that's why you are confused. Okay, just give me 1 second. I'll be right back. Bring some coffee or some drink, and I will just give you 1 minute or two. Hello guys, again. So let's see. Cloud with Twitter account. See, did the Netflix and I crash? Let's see. Where is Netflix crash? Where is it? I don't see anything. Okay. So there is nothing there. And the other stock is I. Let's see here again. Which is Intel. So this depends on where you put your stop loss, or are you staying or no. So I have no idea where is your stop loss. Okay. Thank you very much, Duna. Thank you very much. Now, Jeremiah, I use the pivot. Now, pivot is a very old strategy. It's for trading. And it seems to me that you are mixing everything together. You are mixing trading with investing, with indicators, and it's a lot of messed up things. So that's why when you want to buy and when you to sell, you don't have the basics of trading. The basics of trading is you are sure where to buy, which is called the momentum. And if things doesn't work, where to sell. You should plan this before. Not you buy and then you think. Okay? So you said this before you do the trade. And if it is an investment, as I told you, investment it is not you buy today, you sell tomorrow, and you say because the stock or the ETF has gone down. That's why I said this is not investment. This is trading. So you should try to do the thing. For the earning season, which when you say clown with Twitter account, you say the earning season. There is no season for the earning. Each company has its own date. There is no one day that all the companies they have their earnings, or a season. This is a quarterly. It depends on each company quarter ends, because it is the company that shows when the quarter ends. It's not the government. It's not the Security Exchange Commission that asks the company, you should put this, you should put this. No, it's the company that put where the quarter ends in order to have earnings, if there is like a dividend or there is no. Okay? Now, Twitter, clown with Twitter account said, cat has to make double bottoms or a base before start heading north. Now we see, clown with Twitter account, we don't project what the stock is going to do, and we don't follow patterns that are online and in books. This is stupid. Double or triple or 6 or 7, or if you stay the whole life waiting for this, it will never come. Okay? So people, they use these patterns because they don't know how to trade by themselves, because these are just patterns that happen in the market, but it's scarce. It didn't happen for each stock or something. That's why you should rely on something which is stronger than these things. It's greed of information, even way pay money to confuse us. Yes, listen. No one will confuse you. It is you who confuse yourself. There are thousands of strategies in the market. There are thousands of ways to invest in stocks, like for the long run. You find thousands of books. Okay? So you should make your own information, either by reading or by following someone, and you should learn something and practice it. You will find logic in the future when you understand how the strategy works. Because I'm telling you from now, if you use indicators, if you use moving averages, you will never make money. Because indicators are strategies by themselves. So you don't know how this indicator works. Why you should buy here? If they say 2 lines cross at this point, you buy. You ask them, why should I buy here? What is the reason? Okay? But for me, when I told you to buy here with the momentum, I will give you the reason. It is so specific, the reason. and I will give you the variables that if they change, but the strategy doesn't change. It's always you buy a certain momentum. And this is what I teach. Okay? I don't use indicators because the information are lagging. It means are delayed. And if you change the, for example, moving average. He said to me, oh, it's 20 moving average. I say, okay, change it to 50. Do you find the same information? You say no. Change it to 200. Do you find the same information? You say no. Okay. So it is whenever you change the number of the moving average, your line and where he asks you to buy will change. So this is not true then. But when I say you should buy on this candlestick, I will give you the reason why. And you can buy in the future whenever this situation stays. So I give you the basics of trading that you will never mess up with it. It will become so clear that you take any stock and you can get an opinion on it just when you see it. You don't need moving averages, you don't need indicators, you don't need to ask someone else, you don't need no one. And this is why my strategies work, because they are very, very simple and it is based on solid thing. Okay? Now, there is another thing here with another question about clown with Twitter account. How about gaps? Should we pay attention or ignore them? Okay. Okay. Here is the question. I will, Jeremia, I will talk to you just after the clown with Twitter account because he's before you. Clown with Twitter account says, how about gaps? Should we pay attention to them or ignore them? Okay. Here is the rule. Now, my rule is the best rule in the market. You will never find something better than what I say to you. If you are going to a stock and you find the earning news coming, it depends on you. Are you going to take the risk? Yes or no? Understand that when you take the risk, it could be a gap up, it could be a gap down. So there is a big risk of losing money and there is a big risk of making money. Now, you ask me, should I stay or no? This is your decision. Because no one will decide for you. Because I and you and the market, they don't know what the trader will do when they get the news. But what I ask you something else. You can check the news when they are coming and see the price. Okay? And then you decide to stay or to exit. This is one thing you can do. But to be in the middle, there is no in the middle. Either you stay or you sell. So it is up to you. And I'm telling you another version. If you buy, you can wait for the news after the market close or before the market opens and check the price when the news comes. You should wait. You should wait and see the news and should see the price. But there is no guarantee that if the news are good, the stock will go up. There is no guarantee at all. Sometimes even we have good news, but the stock next day goes down. Okay? So these earning news are very tricky. But for me, if I ask you ask me, Kareem, what are you doing when the earnings comes? I stay. I don't care. Even if I get gap down, I will assume responsibility for the trade. Okay, this is the way I do business. Sometimes I should take risk. This is business. Okay, and there is no way except when you exit and you follow just the trend and you exit. But what if the stock has a gap up and you double your money? Let's say for me, I bought a lot of times. I get a lot of times gap ups, but one time I get double from 78 to 135. I double my money the next day. Will you be happy to see that? You say yes. Okay, so if it is yes, you should assume a responsibility for the trade. If you are scared, sell before the news. If you have made money. Okay? And don't regret afterwards. This is the problem with swing trading. In swing trading, you should do things and you take responsibility of doing things, and you will never regret this. Even if there is a gap down, it's okay. Because it is a part of the game. Either you accept the game or you leave the game. There is no something in the middle. Okay? Jeremiah Waters said, if I had 1,000 extra, I would give it to you. Thank you very much. Thank you. Jeremiah, my goal and my aim is to teach people what I do myself. I am not teaching you from books or from online stuff, because most of it doesn't work. It doesn't work. Why? Because they mix things and they make a lot of trouble. So for me, my strategies are very easy and they are based on strong things. Okay? And they are very easy. It means when you begin to trade, you will find that my way is very, very easy compared to the others who use indicators, moving averages, and the other stuff. And if you exit the trade and you do a mistake, you can buy the stock again. This is my strategy that works. That works always for your benefit. It's not you exit the trade, it's the dead end. No. Any stock that we exit, either with a profit or with a loss, we put in a portfolio and we follow it. If there is a new news and there is a new information and the stock is ready to be bought, we buy it again. What's the problem with that? Okay, we buy it again. And thank you very much, Jeremiah. Okay. Jeremiah Waters says, CMSCA holding, but Disney has the better hand. What to do? I don't, Jeremiah, I don't understand what you say about Disney. Better hand, what to do? A better hand for what? See, Jeremiah Waters, you exit the trade and you wanted to enter again, but I don't know what strategies are you doing or how you buy or how you sell. Okay, so it's a very important thing that you should know how I trade and how I exit a trade. Okay? So let's see. I checked both of your stocks. They are not stocks that I could buy. So I don't know why you how you are buying your stocks. Anyway, Jeremiah, you should always try, okay? Try to see how I trade. Now, you are trading whatever you like, and maybe you are using some indicators or moving averages, and you think that those are reliable. For me, they are not reliable, and I don't use them. Okay? Clown with Twitter account say, most of gurus tell how much they make. Clown with Twitter account. If you are living here in USA and you are American, there is a proverb that says, don't ask a man how much he makes, and don't ask a woman how old she is. This is something bad to ask people. Now, people who are showing money, showing their accounts, showing I don't know what, okay? They have strategy to attract traders, and they show you the money, okay? And this money, it could be true, it could be fake, but you will never know how do they make this money. It could be from their teaching or from their subscriptions or for, okay? And especially people who are doing penny stocks, and penny stocks, because it can be manipulated. I can show you a stock, okay? I buy it right now, and I will go to another account, I will buy it, or I ask a friend to buy it. It will go up, and you will see the trade is fine, and I am making money. But in the truth, there is no money made. So you understand, if you are following people who want to show you where they take their vacations, or what is their friends, and how they have too much money, and they have girls, and they have this stuff, okay, just go with them. It's not what I am doing here. I am here doing business to teach people how to trade, not how to have fun and show their money and the other stuff. So this is just something. So another question, Ora Provis, do you use the monthly and weekly chart to look for setups? No. No. Ora Pronobis, I use the daily. I don't change it. Because we are buying, my strategy works with a daily, a day candlestick. That's why when you see my charts, you will never find weekly or monthly or yearly. I can explain to you by yearly or monthly, I can explain something else. Okay? But in real, I don't use other setups. I use only the daily. Cloud with Twitter account, he said, why? I am asking why they do that. You know they do that because when they show 1 million or 2 million or 500,000, they think that this person has made this money from $100. As I saw someone who is promoting this stuff from $100. You can make $100,000 in 1 month. Now, you understand that these are fake things. And they can make it for true. Yes, they can make it with certain manipulation of stocks, or penny stocks, they can make it. Okay? Because this is a strategy they make in order to attract people, and they do a setup and they can make it. Like this. But you bring $100 and you become a millionaire, or 100,000, or this is not true. In real, it's not true. If you are not using manipulation, or you're asking some people to help you or something like that. This is kind of strategies or advertisement for their business. Okay? Trump. Oh, hello, Trump. I haven't seen you for a long time. Where have you been, man? You don't have nothing to show? No, I show some of my trades, but I don't show you how many shares or my account. I showed where I am right now with the 3 stocks, and I have the 4th one in my subscription. I show the people what they have, and each 1 week or 2 or 3, I will give a follow-up. Okay? A follow-up, it means what I am there, what I did, did I exit, I'm still in the trade, okay? Where did I buy it? I always give this information to my subscribers, because they are the people who believe in what I do. That's why I give them what I do. Okay? And this is a part of teaching. But it is not meant that you follow me in order to make money from what I do. No. For me, my teaching is to make you an independent trader, because you can find stocks better than my stocks, because you always search, you can find better stocks than mine. Because for me, I don't buy each week. Sometimes 2 weeks, 3 weeks, 4 weeks, I don't buy because my stocks are doing good. Why? I don't have money to buy. Okay? So that's the reason. Now, Jeremiah Walters, you said I use the hourly. Sometimes I don't use the hourly. Hourly is a day trading. So you are mixing swing trading with day trading. That's why you are always confused. Okay? You are mixing things and you don't know. And you are, I think, you are having many strategies together and you are mixing them. And you are mixing styles. For example, you mix day trading with swing trading with investing techniques. You should not do that. Each style has its own rules. So you are breaking the rules. You are mixing everything. Okay? Jeremiah Waters, that's why you will never see clear what's going on into the market until you clear all this from your trading. So, as I told you, so stock say, do you use limit in shorting? No, you can use any. You can use limit. You can use market order, or you can use stop order to buy, to short sell, whatever you want to use. But if you see that the stock is going down very, very quick, you should use market order, because you want to enter right now. Because market order gives you the price of right now. You don't wait. If there is, you get it. Jeremiah said, I am alone, so I will see clearly. No, I don't mean you are alone or you are with friends or with people. You are alone, but you are mixing styles, mixing techniques. It's all in your strategy that you are using. I'm not speaking about you are alone or you are with following people. I'm not saying you are following people, but you are mixing things together. And this mixture, it's like when you want to make a dish, like in food, but you don't know a recipe. So you are just adding potato with tomato, with apples, with meat, with water, and some spices, and you throw them in the oven, and you eat what you made. Okay, so that's what you are doing. Okay, and when you see when you begin to tell me, to show me your stocks, to show me what you are using, I begin to understand how you are thinking and how your strategy will be. Okay? So, but this, you can try, and you can lose, in this many years, you can lose thousands of dollars trying, but it's okay. If you want to, you can continue with that, no problem, until you succeed one day, if you get the right criteria. Yes. There is no doubt in that. But for me, the teaching I am giving is to save time and to begin right. Instead of wasting 1 year, 2 years, or 3 years, or 5 years, there are some people that are working in Wall Street with mutual fund. They are working with them, but they don't know how to trade, and they are losing too much money, and they have too much money in their hands, but they are still losing always money each year. Why? Because they don't know how to trade. That's a very simple thing. Jeremiah Walters, you said, I will not lose thousands. This is up to you. I don't say you lose thousands. It means you lose thousands. You can lose more or less, depends. Now, for brokers, please, we don't promote brokers here. Okay, Robinhood or not Robinhood, because it doesn't ask for commissions. This doesn't mean that you are not paying money. You are paying, but you don't know. Now, the only thing you can see, Jeremiah, I know you don't know. Jeremiah, go to Robinhood and see if there is a bid and ask. Is there bid and ask? There is only ask. It means what they ask you to pay. So there is no bid, so you will never know what is the real price that you are buying with. So you are paying maybe more than your commission, but you don't know. That's why, Jeremiah, I don't use brokers with free commission. There is no free lunch at the market. You should understand that, and you will understanding in the future. Okay? So this is just something that we explain. Now, Jeremiah, you are, I don't know how many years you are doing this. What you see is nonsense. It's just because you don't know what's going on. Do you think that a broker will open account for you for free? Why he opens for free for you? Do you know how much a broker will pay to the exchange? The fees to give you the price, to give you everything? These things you don't know. So you are 2 years, even if you stay 10 years trading, if you don't know that Robinhood is taking your money, you will never know because you don't search. Okay? So this is part of the game. And I'm not going to give you secrets of things, how it works. So you should always understand what we speak about. Trump said, "Do I worry about tariffs or market as a whole?" Now, what's this tariffs do into the stocks? You should see always the price of a company. Don't see other things than it is outside the price. Tariffs or not tariffs, this will not change that much. Now, if you buy a stock and it's going down, tariffs or not tariffs, it doesn't change anything for you. Either you are making money or you are losing money. So stop watching too much TV. Because when you watch too much TV, you will find economy, you will find politics, you will find advertisement, you will find a lot of stuff. And you are getting all this in your head. Okay? So, to be clear, you only see the price. I just showed you the guys when we are seeing aerospace and defense stocks. There are some stocks that are going up for 3 months right now from the correction. Are you going to tell me that this tariffs has influenced these stocks? No. For example, Facebook. It has a problem with the government, and Mark Zuckerberg go to the court for information from ads and from some stuff. Does this make Facebook a worse stock to buy? No. The stock has been going up for 2 months or 3 months. People are making money. And you are speaking about tariffs and not tariffs and the whole market. Are you the owner of a company to be worried about tariffs? To import or to export things? Are you the owner of a company? Yes. If you are the owner of the company and the government change rules or put what you call taxes, yes, this can influence your business. But man, you are doing with the stocks. They have no relation with this government politics. None. I'm telling you. Okay? So don't worry. Worry about your investment. Trump, try to see your stocks. Focus on your stocks that you bought and see if they are doing good or bad. Don't worry about the market. You are not buying the whole market. Okay? Now, hello, Paul Justiniano. Thank you very much for coming. He asked the question, what do you like better, pull back or breaks out? I trade everything. I trade everything, and I trade 2 ways. Either I use a stock screener or I use my portfolio. These 2 things I use always. And this is how I make my money. And this is, but it's not only those. I can buy a stock at any time when there is a momentum. A momentum is not only breakouts and pullback and the other stuff. No, a momentum is always there when the stock is going up into a trend. I can buy it at any time, and I showed this to my students, and they know in any stock they can buy at this kind of momentum. Okay. Jeremiah said, times they are changing, would not pay for trading ever from now to when it ends. Times they are changing, would not pay for trading. Now, what do you mean by changing would not pay for trading ever? I don't understand what you say. Jeremiah, can you formulate this question again, this sentence again? Raju Ahmed said, your teaching style is the best I know because I am your subscriber. Thank you very much, Raju Ahmed, for your testimonial. Thank you very much, and it's appreciated. Trump said, how about Tesla? You know, a lot of people, they follow these big stocks and they are overwhelmed with the information. I will show you Tesla right now. So it seems that it is going into a correction. We will never know. If it's correction, it will be like this or in the future. That's what I want to say. And Paul Gestiano said, ADP is doing great. When I trending, in your opinion, is it better to enter in pullback or break out? No. Paul Gestiano, if you are my student, you would know where to buy in which place. So for me, if you are my student and you are my subscriber, or you bought or you ordered my training, please, Paulo Gestiano, send me an email, because I don't give recommendations to buy in my trading, in my live sessions or so. But I can help you and I show you when to buy according to my strategies if you are my subscriber. So I'm not going to tell you. Let's see ADP where it is right now, just to see it. Okay, I see the stock has begun the trend, and sometimes it is very volatile. Okay, so Paul Gestiano, you say sectors. Now, well, what about sectors? You say sectors. You say, Jeremy, I want to say, worried about investors, no real trades exist. Where Jeremy, you are in another world. There are some stocks that have been going up after the correction of February, the beginning of February. There are some stocks that have done a very, very long trend, and they are making a lot of money. It doesn't mean that you don't find this kind of stocks that other people, they don't find. Okay, so this is just your opinion about the stocks that you see, but there are other stocks you will never see because you don't know how to search, and your criteria is not my criteria. Okay. Clown with Twitter account said, why IPOs rise at the beginning and then they sink so badly? No, see, I'm telling you something about IPOs. Most IPOs, they don't succeed at first. But some IPOs, they succeed and they do well. Okay? Now, why most of these IPOs, they don't succeed? Because the investors, they don't know these companies. I will explain, because I have done this. I have explained this before. And Clown with Twitter account, I think you have watched this before, because I have explained it many times. But just for you and for all the other guys, I will show you. I will show you why the IPOs sometimes are not doing that good. Okay. So let's go and check. Okay, so let's say a stock begins at $15. This is the first day. This is the first day. Now this is $15. This is the price. Now sometimes the stock goes down a minute, 2 days or 3 days, and then they go down, and then they go up. Okay. Now this is 15. It goes sometimes for $20. It goes down to $7. This is just an example, okay? Then, now, it is $45. Now, let's say from this is January 2016, and this here is, let's say here, 2017, and now 2018. Now this, I just give you an idea why the IPOs go down, then they go up sometimes, okay, not always. Now this is because of the investors. Now the investors wait 1, 2, 3, 4. There are 4 quarters. They wait for the earning. It means how much money, if you buy 1 share, how much money you can make. This is called EPS. EPS, earning per share. Now, if they see the company is making money, begin to make money in these 3 or 4 quarters, okay? So let's say 1, 2, 3, 4, and we are now in the first, now we are in the second quarter here. Second quarter, it means 6 months after 2018. Now, let's say here they see that the EPS is minus 1%, minus 2%, minus 3%. It means the stock is going down because the investors, some are selling. You understand that? Some people are selling this company because they don't see the money. They buy, they just begin to buy, and they have good news, but later they find that the earnings are bad. But fortunately, the company here, after 1 year, it begins to make money. 1%, 2%, 3%, so maybe 4%. So the company is making good earnings, EPS. Now, when the investors, this is the buy, the investor begin to buy, and swing traders go to buy, the investors go to buy, all the people go to buy. Mutual funds, all, everybody. That's why the stock is going up so good. Okay? That's why most of the investors. But some, they are so good at the first, but they are few. Not that much. So this is just an example how things work. So just you get an idea about this. Thank you very much, Polo. And Shahul Khan said, your teaching style is awesome, sir. I am big fan of you. Thank you. Thank you very much, Shahul Khan. Thank you very much. IPO suck. For example, Twitter, at the beginning, it was an excellent IPO. I have bought it at 45 and I sold it in the 70s because it goes to $74.74. When it's going down, I sold it. So it depends. And for us, we are not investors. We follow just the trends. It doesn't matter when we buy. We don't stay that much long with the stock. That's the thing that you should know. So Cheaper said, do you ever trade the end lock up or on IPOs? See, the end lock up, it means when it means most of the time, I think it's 6 months. Now, why they do that? It means the government asks people not to sell after 6 months. It's just because they bought it before becoming an IPO and they can make a lot of money. You know, this business of IPO is making billions of dollars to banks and to brokers. They are making billions of dollars because of this. And this thing, most of the time, you will find no information about it, and it is a hidden secrets. Only the professional people know about this thing, especially if they have money. Now, all the people who are the public, they can't access information for the private companies. You can't access information. And this thing of selling shares before the IPO is launched is something very, very secretive. I will just give you an information before we go to Polo Justiniano question. Okay, so I'm going to go with the Cheaper because he asked about the lockups of the IPO. So I will just give you an information for you guys. I think I have explained this, but it's always good. Okay. Now, so let's see here. I give you here the company is public. It means public here is the first day you can buy a share of a company. It becomes public. The IPO is public when you can buy it. Now, when it is private, you can't buy private company shares except when you ask them. Now, when it is an IPO, before it go here and launch on the first day, this is here the first day you can begin to buy and sell. Okay? Now, before that, what happened? The private company makes, let's say it has 1 million shares. Now, there is a procedure when this 1 million, let's say it becomes 100 million shares virtual to be sold. Just an example, okay? Now, if the share is $1, they will sell to banks and to, let's say they sell it to them for, let's say, $10. It said 100 million. Now here, when it says $10, it means this company, let's say it has 1 million shares. Each shares is $1. So this company has only $1 million, which is a very, very small money. $1 million, small money. So it wants more money to make this private company public, and it make it bigger because now it is just small. So it needs money. What did happen is that when it sold it for $10, they make money. It means $1, 1 million shares. They have now 100 million. By 10, they will have now $1 billion in their pockets. Now $1 million, it goes to the company, and the company begins to make mini stores, to buy things, to buy debt, okay, to do a lot of stuff with this $1 billion. Now, those people who bought from the banks at $10, they ask them not to sell after, for example, 6 months. This is called lock. It means they lock the sale. It means you are not going to sell if you bought before the company becomes public, because lock sale is for those people who bought at 10. Now these people who bought the stocks at $10 or 12 or 13, because whenever they begin to buy, the price will be going up. Now let's say it opens with $15. So those people who bought at 10, when it opens at 15, they will never sell because there is a lock up. Okay? Now here, after 6 months, they can sell. Now, it all depends where the stock will be. Okay? So, who is risking money? It is those people who bought before the market is public. They have the big risk, because the company has no risk because it has already sold its shares. Now, the banks, brokers, they sell to their customers, the rich people. Okay? The rich people, they buy before. Okay? And after the lockup, all these people who bought at 10, they can sell in this after sale. So it could be the price could be going up to, let's say, $34, or it could go down to $2, for example. Now, both ways, who will lose a lot of money or make a lot of money is those guys who buy here before the market opens. Because if you buy at 15, the stock is going down, you can sell. You are public, you are sell. So there is no problem with that. But if you bought it before, you cannot sell until 6 months or 2 months or whatever they will tell you the time you can sell. Whatever the price goes up or down. If it goes up, you are lucky, because after you see 34, you can stay and the stock can go to 60 or 70 or 100. So you'll become a very big investor. But all depends on what will happen. Okay? This is just how things work. Now let's say let's see. We have a lot of questions. Now, there is one who is asking, Mike, thank you, Mike, for coming. Mike Sojai, he say, I like your training. Can I buy your training online? Yes. You have two options. You can either subscribe to the Golden, which is $55 a month, or you can order the training level 2, 3, 4, 5, 6, 10, whatever you like as training. You read what you have. The first training is for free, and then the other training you can order them online. And please go to my website, and you can find the Golden subscription. I will give him this. Okay, go to the website, and you can order, or you can subscribe to Golden subscription. Golden subscription, or you can just order training levels as you like separately without doing the subscription, from 2 upward, normally to from 2 to 10 and 13. It's for swing trading. And you can check the other if you are interested, you can see them. Now, if you need me, please send me an email. And I will be happy to assist you if you need more questions. Okay, let's go back and see what the other are saying. Jeremiah Waters, you say IPO suck. As I told you, as I explained, Jeremiah, that some IPOs succeed and most of them, they don't succeed now. You should wait 1 year, 2 years, 3 years. And some companies, they go back because the people, they like them because they begin to make money. When they begin to make money, the stock will be going up. That's the truth. And there are some IPOs that are now very, very, very big stocks. Okay, let's go to Paul Giustiano, and with his question, he said, market sentiment, hot sectors, hot industries, best trending stocks with a linear regression, position at 2 o'clock stock, followed by daily traded volume or over 1 million and market cap up of over 300 million. Now, Paulo Giustiano, who is making this criteria? For me, I don't follow what is called hot sector and hot stock and market sentiment. Who will do that? It is just analysts who describe a stock like a hot stock because he is getting paid. Understand that these people are paid to tell you information. They are not neutral. If they are neutral, they can buy stocks with you guys and they risk their money. But you will find a small notice in all the analysts when you go online. What did they say? They say this is just an opinion. This is relied on past performance. It doesn't mean that in the future that these stocks are going up. This, it makes people not thinking at all about their investment or their trading. They become into hallucinations. Okay? Hallucinations, it means people, they don't know what they are doing. They just ask them to buy, they go to buy without thinking, without. Now, all the criteria that you said, it is just an opinion of someone. For me, I'm telling you, I am not using all this information that you tell. I am not. I don't follow what is it called, a hot sector. What does it mean, a hot sector first? How do you recognize this? Or hot stock, or trending, or volume over 1 million. If it is a penny stock with 1 cent, or 2 cents, or 5 cents, is 1 million a lot? No. 1 million is not enough. So 1 million volume, it's not a criteria, because there are variables. There are variables you should know about the stock. And the price of the stock is very important. It's not the volume. Okay? And a cap over 300 million. 300 million is a very, very small company. Like penny stocks. 100 million, 200 million, 500 million. These are small stocks. It has nothing to do with big caps or medium caps or Russell 2000. They are not the same. So all these, that what you see, Polo, all these is just criteria made by a person. And you are following this person blindly. Because there are mistakes in what he says. The volume is a mistake. Because 1 million out of which stock? What if a stock is 0.00001? Is it a good stock to buy? No. Okay? So, Polo, I don't follow people. This is the main thing I'm telling you right now, and I have told you before, and I will tell you in the future. I am not following anyone in the market, or analysts, or gurus, or anyone else, or books, or chat rooms, or forums, whatever is, I don't. Okay? Now let's go to another thing. Jeremiah Walters, snap sacks. I will not evaluate stocks, because I only evaluate stocks in general for my students who want to buy those stocks. I give them my evaluation according to our strategies that they know. When they see the stock, they know if it is a buy or it is not a buy, or they should wait, or they should do something else. So Jeremiah, since you are not following me in what I do, I can't give recommendations. So Polo said that some parts of my criteria. I also check sales, the growth, and low debt just to trade okay companies. Like in the last 3 months, services has been doing great. Now, Polo, you are mixing styles. You are mixing investing with swing trading. You are mixing them. You have techniques that are mixed up. Now, in swing trading, you should not look for criteria that belongs to investing. Okay? Low debt. No, I'm telling you. If a stock is $10, it goes to $100, and it has low debt and it has a very low growth. Are you going to buy? Yes or no? You are not going to buy, right? Because you see low debt, low growth, but the stock is going up. Now we follow the price. We don't follow the stupid thing about the company. Low growth, low debt, management, whatever is this company doing. We don't care about the company. We care about the symbol. Is it going up or going down? This is trading. We are not doing here investing for many years. Yes, if for many years you have criteria, yes, you should have criteria, because you are doing investing for 5 years, 10 years, 20 years. Like Warren Buffett said, for 20 years. You should stay 20 years in order to see your company growing. Yes. You should see the low debt, you see the growth, you see the earnings, you see the dividend, you see all that stuff. It's just because it's very important, because you are staying for a long time. But for me, I buy today, I sell after 2 weeks. Why should I see the debt and the growth and the management? I don't see that. I don't need it, and I have never looked at it. So Polo, you try, what do you say? What do you think of my criteria? Your criteria is maybe if you push them to the investing. Because there are some of your criteria that are false. Okay? They are false. If you buy a company that it is 300 million, some mutual fund, they don't buy it. If you are an investor, they don't buy it because it's so small. They want to buy a company that it is big. Okay? So these are some of the things that I showed you, and I don't follow what you are following. Jeremiah said, made $2 with stop 6 months, 1 share ago, but would not buy it again. You made $2? That is too much for you, man. If you go to Starbucks, you can't buy coffee with these $2 that you have. Jeremiah, you astonish me. You astonish me. I thought you say you have made $20,000 or something, and you say $2. Man, stop playing with stocks if you don't have money. Okay. Small gains. Is this a gain? Is $2 a gain? Okay, so I don't think so. Let's see here. Now let's go with the explanation of Polo, because he has written too much. So I will read to you guys what he has put, and then we can explain. Hot stocks, I meant to say trending sector, not hot like penny stocks, like services stocks are doing good. If you see the ETF that tracks those stocks is trending well. No, I'm not talking about penny stocks. I am talking about stocks over $10. I met that criteria by myself, and I have been profiting for over 2 years. I don't follow gurus and people. I am position trader. I do not exit a stock just because I trade. Sir, I trade, I do not invest. Maybe you are confused what you are saying. Now, what I think you are doing position trading. This is position trading is from 1 year to 3 years, and you can check technical, you can check things. Now it's very good that you made your criteria and it is working for you. You should follow this. That's the good thing. If each year you can make money with what you do, is good. You should just continue what you are doing, and that's it. Wiseman said, Kareem, some stocks trade into a range after you buy them. Some videos you said you exit, others you stayed. Can you explain how you decide if you will stay or not when a stock trade into a range? Now, Wiseman, when there is a trending into a range, it depends on your risk, where you put your stop loss. Okay? I prefer, for me, I always, when I buy, whatever price I buy, the first initial stop loss, I always put it. If things go well, okay, if things go well, I'm staying. But I don't change the stop loss that often until I am sure that the stock is doing good. I don't play with this a lot. Now, whether to stay into trending into a range, this depends. Where you put your stop loss, how far is the trending into a range? There are some stocks, when we say trending into a range, it could be $1 or $2 or $3. But there are some, it could be $30, $40. This is too much. This is too much. You buy from the top and it go $40 down and you say, what should I do? No, I don't play this game. I always put a stop loss and I always buy from the momentum. I don't buy from the middle. And it depends on how much wide is this trending into a range. How wide is it? Is it only $1, $2, or $3? Or it is $20, $30, $40? So you should see where you bought, what is your risk. And for me, if you exit with a stop loss, don't come to again until the stock is doing better. This is what I do always. I don't stay with a loser because it is trending into a range. No, I exit and then I will wait a few weeks, 1 week or 2 or 3 or 1 month or 2, and I will see where the stock is going. Does it continue to go down? It means it is a loser. It is a real loser. And if it continues to go up, it means that it is a winner. I buy it again. Okay? Jeremiah Waters say small gains count. See, in order to make money in the market, you should have big winners in the year. Small gains with the small losses will get nowhere. So, in order to make $2, why did you make these $2? There is a problem in the stock. If the stock, yes, if it doesn't go that much up, or it is a loser, but you make $2, it's okay. But if the stock is going up and you exit and it is making money, you are wrong. So your strategy is false. That's what they say about small gains. Small gains will never make a good trader. You can have by force. You can have trades with $2, $10, or $100. This, I call them, is just break even. Break even, it means it's not a big deal, either up or down. It's not something that you can count. If you make 100 trade with $2, let's say you make $200, and then you lose $200 in one trade, you lose all your profit. So this is stupid if you continue like that. Clown with a Twitter account say, show us an example of stock that you trade. I have showed Clown with Twitter account. I have showed many examples since 2012. All the trades that I have done with Facebook, with Twitter, with Apple and other stocks, I made examples. Okay? Now, the only thing I don't show you in my trades is where I bought or how do I come to buy on that price. I will not show you, but I will show you where I exit. Okay, and I have made a lot of examples with Twitter, with Facebook, and with Apple. And in my training, I put live. There is one which is live for each week. I do a live video for 5 months and 2 weeks. This is one trade. And each week or two, I make a live and explain what did I do? Should I stay? Should I exit for 5 months, 2 weeks? It's 30 videos. If you want to see them, you can check either training level 7, how to follow an uptrend, or you go to my golden subscription and you see them. Paulo Gestiano, have you ever used the FinViz stock screener? Yes, I use it, yes. But the problem is not the stock screener, because we have hundreds of stock screener. The problem is the criteria that we use. For me, the criteria that I use in stock screener, there are only 2. But I have other criteria that they don't have into the stock screener, because it is a visual chart thing, criteria. You should study them from my criteria in order to get to know them. I use FinViz, I use a lot of stock screener, and I teach how to use FinViz according to my criteria. But this list that I get is not the list, because you will find a lot of stocks. You should filter them with my criteria that doesn't exist in stock screener. I have other criteria, which is training level 4. How to select stocks. I will show you what stocks to select and why some charts are bad. I don't buy them. Even with my criteria, I find those stocks. When I see them on the chart, I apply them the other criteria. If the stock is not good, I will never buy it. Okay? Trump said, is aerospace industries speculative or conservative or useless? Trump, I think you came late tonight. There is one guy who asked me about an ETF about aerospace and defense portfolio ETF, and I explained to him that this sector, it has good stocks, it has medium stocks, and it has bad stocks right now. It depends on you. If you use my strategy, you will find all the good stocks. You find the bad stocks and the average. It's just by using my strategy. Okay? If you put the stocks into a portfolio, you see them one by one. You apply my strategies, you will find what are the good stocks, what are the bad stocks. So, aerospace industries, we have 2 industries. There are good, there are bad, and they are the medium. So I can't say it is a good or bad. Right now it is not that good, but there are stocks that are there that are excellent. Trump said, I don't agree with you, Karim. There is no criteria, only criteria in the price, and you know What do you mean there is no criteria? Are you speaking about stock screen FinViz? It has a lot of criteria. It has hundreds of criteria you can use from. What do you say there is no criteria? So, Trump, please tell me, what does it mean there is no criteria? I don't understand what you mean. Because in FinViz, there are hundreds of criteria. Hundreds. Not just 1 or 2 or 3. There are hundreds. Whatever you put criteria, the stocks will change. Okay? So understand that. I don't understand what you mean by there is no criteria. Paulo Gestiano, what criteria? I do not hold stocks for years. The important thing are liquid stocks in trending sectors, industries and markets. Like right now, opinions for range trading, selling vertical spreads. Okay. Volume, mid cap or small cap companies, high beta stocks over 10 and up, charts looking for the 2 p.m. like no. Oh, okay. Polo, you are putting your criteria, but understand that I don't use any one of what you use. So in order to end this discussion, I am not using all what you use. All what you use, I don't see it. Now, liquid or illiquid, there are some stocks that are illiquid and they are doing excellent. So for me, I don't use volume as a criteria. I don't use it. You use it, I don't use it. Trending sectors, industries and markets. This what the people they put online that it is trending or not. For me, I know what does it mean trending for my own perspective, for my own opinion. I don't see where this is. And selling vertical spreads and other strategies of options, I don't use options. A stock is going up, yes or no. I don't care about your options. I don't care because options, it is other strategies. I don't use them. Okay? Stocks that are high beta, understand that this beta thing from a sector to another sector will change. For example, technology stocks always have high beta, but it doesn't mean that they are good. And you find small stocks that have a lower beta, but they are doing good. So this beta, I don't use it. That's why I told you before. That's why I told you before. I don't use what you use. Okay? And I don't care about all what you use because for me, I have my own strategies and I teach these strategies since 2010. Okay? So I saw all what you see, and I know more about indicators, about investing criteria and the other stuff, and all these I don't use. Okay, just to make sure you understand. Paulo Giustiani say yes, the risk is more in technology. No, the risk can be anywhere, not just technology. I can show you stocks that are not in technology, that are in drugs. They can go so high and they can go so bad. The risk is too high. So it's not only technology stocks. Okay? So it depends. It depends on the stock itself. Okay, and sector is very important. No, it is not important. I don't trade because the sector is going up. Sometimes the sector is going down and I trade and I make money, because stocks are not all going down or up. There is always a stocks that go, like I just explained with aerospace, with Jeremiah when he asked me about his ETF. I saw the index. There are some stocks doing good, some stocks doing average, some stocks doing bad. So it depends on you what you buy, not the sector. The sector has nothing to do with that. Market sentiment, who will give you the market sentiment? Okay? Who will give you this sentiment? Cheaper said, I can find good trending stocks in 2 seconds just by looking at the chart. Yes. If you are using the criteria that I use, you can find stocks that are trending very good. You can buy them. You can make money without looking at anything else. Trending sector with trending stocks with trending. Now, trending. All what you call trending. If you see the sector, it doesn't mean that all the stocks are doing good or bad. This is what I want to tell you. Okay? And trending markets, trending stocks, trending things. Who will give you this trending thing? Okay? So, for me, the criteria I use are not what the other people are using. I don't see the sector. I can see the industry, yes, but it doesn't mean you should see the stock compared to the index. Okay? I don't buy a stock because the index is going up. No. I buy the stock that it is going up in whatever sector. Even if the sector is doing bad, some stocks are doing good. And this you can't find with your criteria. You will never find these stocks. This is what I'm saying to you. No, don't tell me go to Finviz and you find. I find myself daily. I don't use this depth thing that you are using and the other stuff. You are telling me to show me how to use Finviz. Okay? Now, okay. So, Polo, Giustiano, we are here. The people are here to listen to me. What I'm saying to them. If you have your own strategies and you are making money, it's okay. So you just listen to me, what I am saying. Okay? And for what I expose and explain, all what you say, I don't use. Okay? So all what you say is just for you, guy. You can do whatever you want with your strategies or with your money, and buy this market sentiment or sector. It means you are free to do whatever you want. Now, as I told you guys, working on trends is a very complicated thing. You should understand in order to make money. Hello, no place like New York City. When do you decide to buy options? I usually buy stocks. I don't buy options, because understand, you don't understand that I don't use $100, $200 in a trade. Let's say if you put 50,000 or you put 100,000 into a trade, into options. If you make money from the trend, that is so good. But what if there is a gap down? Understand that this 50,000, 100,000, 200,000, whatever money you put will disappear from your account. So options are not that easy as you might think. See, Polo, you say, yes, I am, and I am learning, but you just seem that wants to sell. No, see, Polo, I am not here to sell my my products or my training to you. If you are not interested, just listen, okay? And you are comparing what you know about me. I told you I don't use what you use. Period. It means period. I'm not asking you to buy something. Why you think that I am... when I say my strategies are not the same as your strategies, is to show you, and I explained all what you said, and I don't use what you use. Now, your strategies, you learn from the people. It's your opinion, but you are mixing things, and I'm telling you, since you are mixing things, you will never get something straight from your strategies. You take something from here, you take something from there, so you don't know the training for everybody. And you think that when you take an information, it can help you change things. It can't. Why? Because you are mixing a lot of things that are different. Okay? You are mixing a lot of things that I don't use, and other people, they don't use. So each trader who is having a strategy, a well-known strategy, and is using it for many years, you will see the thing very, very clearly. But you are just mixing up. And see, Polo, you can ask me questions, how I do that, I do that, and I have explained to you all what you said to me. Okay? So don't be just mad like this without any reason. And believe me, if you stay 10 years with me and you are watching my videos, you are watching my explanation, I don't need your money. People who want to learn from me, they don't ask me to go to get my training. They just go and they get my training or without asking me. And they try to see what's going on here and there. Okay? And I'm not looking for to go to a subscription with $55. What do I do with your money? It means it is like a stupid thing. Okay? So understand that I am here to help people understand what I am doing. I'm not explaining what the other people are doing or what they are. It's not my problem. Okay? So we stop from this. Okay? No, it's not a contrarian or call it what you say, psychology. I don't do psychology here. If I want to hypnotize you, I will show you trades with $1, it goes to $20, and I will say I will be making you a millionaire in 1 month or 2. This is I hypnotize you. If I want to play with your mind, I can't do that. And you come with me and you just buy my thousands of dollars of strategy, and then after a few days you find it is nothing. Okay? This is how the people they play. They play with psychology. For me, I don't care about the psychology that you are speaking about. For me, it is something real. Either you do my strategy or you do other people's strategy, but don't mix. Don't mix things, because you are mixing things. You are mixing everything. I told you before, it's like you become like Jeremiah before. When I speak to him and I say that when you want to make a dish in the food, you don't just, you should have a recipe, a clean recipe, and when you do it, it has the same results. It's not a recipe where you put tomato with apples with some spices and apples and banana and you put them in the fire and you make a recipe for yourself. Okay? You got nowhere. Now, let's continue with a question. You say, Ada, how are you, Ada? It's a long time I haven't seen you. Now, where do you learn your strategy? Who was your teacher? Now, my strategy is derived from price action. And the most person I got influenced by is Jesse Livermore. Okay, strategies. But I change all that. It's not the same thing. So I check all what is online in the books and I practice them all. Try to see which criteria is good, which is criteria which is bad. And after I discovered that almost what is online or in books are false, because it's a lot of mixture. So I simplify things and I answer my question. Why the stocks go up or go down? This is the only thing I discovered, and this is what makes my strategies. Okay. Thank you very much for your question. Paulo said, no sir, trading is supply and demand. It's called knowledge. Like example, market makers always are ready to take your stops out. That is simple, and many traders have no idea how it works. Yes, the market makers, they don't know where you put your stop loss. This is the first thing I tell you. If something tells you something else, he is wrong. He is wrong because the Security Exchange Commission is against that. If they know that, the whole market will collapse. Okay? Because you will see stocks going from 200, it can go to 100 if there is a stop loss, if they know. And they can sell and they can buy this low and they make millions of dollars each day. So they can't let the people trade. Now, if you don't put stop loss, what does it mean? You are in high risk. That's it. But you should assume the risk. If you are staying 1 year or 2 or 3, it's okay. It's your way of doing business. But some people, they don't stay that much. Okay? That's the good thing. And believe me, when you say many traders, they don't know. Yes. And this is what I am doing here. I'm teaching them how to understand stop loss. But you have a false idea. Because market makers, they don't know where the stop loss. If they know, they will not leave the market as it is. Each minute they will go down and they trigger the stop loss with whatever means they have. And it's not true. Okay? I teach that. So that's why you are asking me. And I know that you are not doing stop loss. But when you get burned one day with whatever price, okay, you will understand this. Because sometimes you will see it in the future. you learned from market maker? The market maker will never tell you secrets about the business. It is so enclosed. Understand that market makers, they don't know where is the stop loss. They know the bid and the ask that it is shown with the people who want to sell, yes, but they don't know exactly whatever is the stop loss. Okay? And if you are following this market maker, are making their money from buying and selling from customers. These the people who make the market. Okay? And they use softwares. So they don't just look and do. They use softwares. It's an automatic thing. They match sellers with buyers. They will never know where is the stop loss. Okay? So understand that. Polo, yes sir, and you must put your stop loss, but very far away. No. There are some calculations wherever you put them, sometimes they go and they hit your stop loss. So this has nothing to do. This has nothing to do with far away or with the tight stop loss. No, it has to do with other things, and this is what I teach. Market makers know much more than what you think. No, they know nothing. If they know something, they will not be market makers. Market makers are doing the business because the exchange, they give them the right to match sellers with buyers. This is their job, and they take what we call the spread. This is how do they make the money. Okay? This is their job. Their job, it is not to look for stop losses, because they will never know. Because the system doesn't give them the stop loss, but they give them buyers and sellers. And they match that with the software. This is the most important thing you should take in mind. If you don't believe me, okay, you follow what you follow. I don't care about what you do. No place like NY New York City. You said, you said you don't trade options, but you offer an option course on your website. Yes, this course is for the beginners who want just to enter, to know what is called and put options, and to explain all the jargon of the options like the Greeks, and to understand how it works compared to the stocks, and understand that I put it in training level 14 because it is something which is risky. Because whenever you put money, you are risking 100% of your money. 100%. It's not like stocks. So you should be in a level that you have understood stocks, and then you can go to options or forex or futures. But I don't meant to teach options as other courses and for it means for advanced students. This is something else. This is something that I don't do. Okay? Thank you very much. No place like New York when you ask. Yes, as I told you, Polo understand this thing about market makers. Their job is not to have risk. They don't do risks, these market makers. They are just matching and they get the spread. That's very simple. That's why I teach. They don't know more than that. Okay? So their money they made because they are a company. They are into business, into matching, and they do their business. That's it. All seeing one might say, ora pro nobis. I don't understand what you mean by this, but it's okay. So, as I told you, always try to think Polo. You say, yes, again, they make the market, they match buyers and sellers, and they provide liquidity. No, they don't provide liquidity. That's why I'm correcting your mistakes that you are saying. Liquidity, it is not the market makers they make. It is the buyers and sellers. There are some stocks that have 1,000 volume. They can't make it 1 million. They can't. So why you say they provide liquidity? They don't provide nothing. What is their job is to match buyers with sellers. And how do they make their money? From the spread. That's it. They don't interfere with what you say about stop losses. You said before that they know nothing about stop loss. If they know, they can call their friends, and their friends, they can make billions of dollars in each day, not millions. So try to understand that what I am saying to you, I am just trying to correct what you say. Just to correct it. You say they provide liquidity, I say it is false. Because liquidity is made by the buyers and sellers. It's not made by the market makers. It's you who go to a stock to buy. So market maker doesn't go to you and asks you to come and to buy or to sell. Do you understand what I'm saying? Okay? Yes. They buy the stock and sell it right away for the spread gain. Yes. Because it is their job. For example, when you want to buy a stock, they will sell it to you. And if you want to sell, they accept from you and they take the spread as a gain. So this business has no risk. They are not traders. They don't trade. They just match. Understand the difference. So their gain they make, it's not because they trade. They just only match sellers with buyers. And this is how they make their money. They don't know even to trade. If you say to him, go outside and trade, he doesn't know how to trade. Because the business model is to match sellers with buyers to get the spread. That's it. It's like a broker. A broker makes his money from commissions and fees, but he doesn't trade. So do you understand? And when you say market makers, you said they have knowledge about stop loss. They don't know nothing. You understand? They don't know. If they know, they can make billions of dollars each day. But the Security Exchange Commission will not allow them to find out these things. And the exchanges, they don't give no information. Okay? So understand that. You say if they do that, then that is called liquidity. No, see. I'm trying to explain to you what does it mean liquidity. But you seem that you don't listen to what I'm saying. Let's say a stock. I will show you, if you want right now, I will show you Polo by the proof. If I show you a penny stock with 0, with zero volume. Where are the market makers? Where is liquidity? Can you answer that? I'm waiting for you to answer. If you have an answer to this. What do you mean? What do you mean, yes, I can? You say, yes, I can. I told you, I will show you a stock that it is zero volume. Where is the liquidity? And you say, yes, I can. Okay, explain to me this. You can answer your, you say, I can answer your question. Okay, answer me the question. A stock has zero volume. Where is the liquidity of the market makers? Answer. I am waiting for you to answer my question. Okay, I will not be waiting for you because you don't have any answer. And when you have an answer, please write it in the chat room. I will read and I will see what you say. Okay? So my question is very simple. Okay, stock with zero volume. A stock with zero volume. Where is market makers liquidity? Where is it? Show me. Ah, okay. Okay. You give the answer right now. You give my answer, not your answer. Okay. You are answering what I said to you. That market makers, they don't do liquidity. It is the buyers and sellers who do liquidity to the stock. So you understand now that you are wrong? You understand that you are wrong right now? What you say is market makers are making the liquidity of the stock. I say to you, no, they don't make the liquidity. They just match sellers with buyers. Okay? So that's it. Well, why do you say, please, why do you say that you are not wrong? You tell me that the market makers are making the liquidity. You are wrong. No, they don't need. They don't need nothing. You told me that market makers are making the liquidity of the stock. They are not. They are not making the liquidity of the stock. I gave you a proof. And you say that you are not wrong. So please, Paulo, don't be stubborn more than that. Because I will stop talking to you because you I don't like people who well, what is this facts that you are talking about? Now you are reading online, or you are taking information but you don't know they are false. I prove to you that what you say is wrong. How can you tell me? I am not mad at you. I am not mad at you. But you should understand what I am saying to you, and you say, yes, you are right, because I am wrong. You should say this. That's it. I know that I am right on this subject. You told me that the market makers, they know the stop loss. I told you they don't know. This is the second fact. I'm telling the facts of the market. I am in the market and I trade thousands of stocks. And I have deeper knowledge than what you know. You are following people online and you say market maker is your friend. A market maker or your teacher. A market maker will never give you any information about what he did. They don't. No. Okay. Let's Polo. You don't seem to understand what I am saying. Although I give you the proof and you are wrong, and you're still saying that you are right. Okay. I will stop with this thing. Okay. No problem, Polo. No problem. Just continue what you are doing. Just continue. And your knowledge, no problem with that. No. I'm just, you know, Polo. It is not an offense not to know something. You ask me the question, I give you the proof with the facts, and you are still stubborn, telling me that you know. I told you, I give you an example, and you can't answer. Okay, so this is just a matter of. It's not a matter of opinion. I just give you an example, and I showed you that market makers are not making the liquidity. You have understood this wrong. Because if there is no buyers, there is no sellers, there is no market makers. There is none. They don't work in this stock. They are out of this stock because there is no buyers and sellers. When there is buyers and sellers, they begin to have liquidity in the stock. Okay? So that just this what I say. And if you don't believe, it's your problem. You will know it after 5 years or 10 years, or you will never know it. It's your problem. For me, I am just explaining to you and giving you examples. If you don't understand with examples, it's okay, no problem. And understand, Polo, that I am not mad at you. I'm just explaining to you things, and you contradict yourself. Okay, that's the main thing. Polo, if I am mad at you, I could kick you out from the chat, and that's it. I could do that, but you are just having some wrong information, and I'm trying to explain to you with a better way how things work. Okay? I just teach you. If you don't accept my teaching, my opinion, okay, just go with the ones that you like, that you feel comfortable with, and they follow what you think. This is just normal thing. Okay? And for me, believe me, I don't teach stubborn people because they will never change. Whatever they see as a proof, they will never change. So they should continue Okay, you continue. We are not against you, Polo Giustiano. We are not against you. You can just continue trading. It's very good. That's it. Good for you. Okay? So, as I told you, which is the main, our subject, which is working on trends. And we say that trends, we will never know how long they go before we enter the trade. And if there is a trend, there are some techniques to know when the trend stops and we should exit and then watch. These are the techniques that we use in order to follow the trends for 1 month or 2 months or 6 months or 8 months. We are doing the same, but we are looking at our trends very seriously, and we protect our profits always. And this is how we do business. Okay? So please, if you have more questions, and it's 3 hours 5 minutes, we try just to go ahead and see if you have more questions. Ora probably said, when a trend breaks on a 4-hour chart, is it a good entry? Now, Ora probably, I don't use the hour chart, and I don't use the hour trend. We use the daily candlestick. This is what I use, and this is how I follow the stock. I don't follow the hours. Okay, so price action, yes, in the daily, not in the 4 hours, because when you are in 4 hours, you are in the day itself. So for me, I don't see inside the day. I see the whole day, how it is. Okay? Okay, Ora Probabis. So this is thank you very much. Now Polo Justiano asked, do you use risk to reward? No, I don't use risk to reward. I will explain to you why. Maybe you have an idea. I will prove to you. Risk to reward. Can you know if you buy a stock at $20? Can you know where it can go? This is my question to you. That's why. Okay, that's the good thing. That's the good thing. Now, since we don't know the reward, but yes, it's very good. You are with me now, and we are okay. You and me, we are on the same page right now, and we continue like that. Okay. When I put the stop loss, I know my risk, but I don't know my reward. So, risk to reward is a false idea. Does it make sense to you? Okay, that's how I work. So there are a lot of things. Polo, I want just to tell you, you are trading for 2 years or 3 years, and you have been trading and you make some money. But there are some stuff that I teach. I will give you always by proof why it doesn't work and why it is false. I give you the proof. It means I am not reading for books or reading from someone or following someone and give you the information. Okay? That's very good. That's very good. You make 50,000. That's very good. Okay? I don't say that you are not making money, so you should understand what I am saying. When I said I don't use what you use, yes. I don't use what you use. Either you make 50,000, 1 million, or 1,000, it doesn't matter. This is the way. The way I do is totally different. That's why the way I teach is different from others. You are using some stuff I don't use. Okay? Yes, with little risk, no problem. So when you say with little risk, you are using stop loss, and before you said that you are not using stop loss. Are you using stop loss? This is just a simple question. You said you trade. Oh, okay. Here I catch you. I catch you. Try to understand what I'm saying, but don't escape. Don't escape my question. Okay? Let's say you buy a stock at $20 and you put stop loss at $10. Is it something that you can do? No. Don't tell me volume profile and the ATR. No. Give me an example. Don't escape, because you are going to escape. Now, when you tell me the information, I will tell you. When you say very far away, let's say you buy a stock. I will give you this example, because you say it's far away. You buy a stock at $20. This is the first thing. Stop loss at $10. Are you? Is it okay with this example? So, okay, I don't need, I don't need your page statement. I don't need nothing. Just be with me. You buy a stock at 20. Just an example. Just an example. Where do you put your stop loss? You say it's far away. Where do you put it? Just an example. Just give me an example. No, I'm not. See, just give me an example. Don't escape my example. Just give me an example. When you say it should be very far away, your stop loss, where do you put stop loss? Okay. No, it's not. He needs to use. Let's say. No. See. Take any stock. Take any stock. It is $20 or $30. Okay. Take right now. Give me an example. We go to it and show me. I will show you something else that you don't know when you show me an example. Oh, I give you an example. Okay, take Apple. Take Apple for example, and give me just we do it as an experiment. Just give me where you buy and where you put stop loss. At least I will see where is your stop loss. For me, I am interested in your stop loss. Hello, VJ. How are you? So, I'm just waiting for Polo to see where he buy and where he puts a stop loss. At least I will see. Thank you very much, VJ. Thank you. He said, "Fine, been following you. You are great. Thank you very much." I'm trying to do my best to simplify all the trading things into a very simple thing. Okay? A very simple thing, and not to look too much outside this thing. So, VJ, you should next time, you should So you said you bought it at 160 in April. So well, which because when you say April 170, which day? Which day? Because April, there are a lot of days. I will put this information and I will show you when you give me the information. 160 okay? Six. Let's see 6 where it goes. $170. Yes. Okay. $170 and okay. Okay. Now let's so in this trade you are losing $20 for each trade, for each share. It means you are losing $2,000 for this trade if you buy 100 shares. Okay, how many shares? How many shares you will buy just to see? Yes, but you say, okay, you say you have made $50,000. Okay, $50,000 from let's say 6 months or something. Your trade will not make this 50,000 in even in many trades with probabilities of losing some. Yes, yes. So how many trades you did? Because this stock, I see here in this trade, you are losing $2,000 in 100 shares. So for my own point of view, yes, I know. For my point of view, you are giving too much risk. Now, if the stock goes down to your risk, you will be risking $2,000, which is 20. So the percentage here, it could be up or it could be down. But when you put the stop loss so down, it doesn't mean that the stock will not go that far and hit your stop loss. This is what I'm explaining to you. When we say go far away, it doesn't mean that your stock is not going to be triggered. This is what I mean about this. No, if you say you are buying less, it means you are buying what? 50. You are escaping. One time you told me that you have made $50,000, and then you begin to show me trades that are maybe $5,000 or $7,000 or $2,000. This doesn't match for me. Okay, it doesn't match. You should either have a very long trades with higher profits, okay, in order to make this 50,000. Okay, so this is yes, I believe you. Okay, but 50,000 out of what? Because 50,000, it depends on how much money you have. If someone, for example, he said, I make $10,000 in these 6 months. Okay? Maybe he has only 10,000 and he double his money. Okay? This is what I understand. But it all depends on how much money you begin at the 1st of January. So you see the thing? Now when I say to you, you put the stop loss so far away, and for me, I would never do that. It's a lot of risk that you put here. Okay? And then you told me that you are not going to buy maybe 100 shares, you are buying less. If you are buying less and less and less, you can't reach that $50,000 as a profit, except when you have a lot of money in your account. So you should here there is some information that it is missing for me as a trader. No, I'm not speaking. I'm not speaking about 50,000 is big or small. No, this I say 50,000 is compared to how much money you have. Okay? No, I most of the time I don't add. Most of the time I don't add. I keep the same portfolio that I have. But if I have more extra money from my profits, yes, I can add. But at the beginning, no. I have a portfolio that it is divided into some positions. I don't change them. Now, when I get more money from the positions, my portfolio change. This is what I say. No. Out on ball, no. We see, for me, it doesn't matter. I believe what the people say, but with more information, I can understand. Okay, with more information, I can understand, because there are some people with calculations. What is the money that you begin with, Polo? If you don't mind, how much money you have at the 1st of January? It means in your account. No. See, Polo. Don't worry about out on bail. This guy, I don't know who is he. So I'm just saying. The percentage that you make, what is it? I'm not saying how much you have, but when you say 50,000 out of what? Just this, because if someone has a big account, 50,000 is nothing. Okay, you understand? But if someone has a smaller account, it's a big deal. It's the difference. But I am not going to ask you more questions, because we are ending this session soon. Oh, okay. Okay, thank you very much, Polo. You are getting 20% of your money, which is great. Which is great. No problem. Oh, you use 230 from your uncle? Don't do Polo. Don't do like one guy who was always with us, and he used the money of his father, and then he thought that he would become a very good trader, and then he go around the world. And I asked him the question: is this money that you are using, is it your money? Yes or no? He told me, no, it's not my money. And then when he lost his job, his father kicked him from the house and stopped his account. And now he is finding a job, and he has no money. I told him before, try not to play with other people's money, your father or your mother or your uncle, because if you lose, let's say if you lose or something happened, it is a big responsibility to lose other people's money. But if it is your money, if you lose it or you trade it or you do whatever you want, it's up to you. No one will ask you something. Okay, so thank you very much. Please, if you have what do you mean by DR? It means he's a doctor? Welcome, Polo, and thank you very much. Yes, no problem. If you use his money with his consent and you do the stuff, but see, I am not giving you advice. I'm just always trying to debate with you things, but I am not advising you. You are old enough to do whatever in your life with your money or without your money. Okay, it's not a big deal. So thank you very much, Polo, for your contributions and for giving us what you are doing, what you are relying on, and it's very good to share. So there is no problem with that. You know, you can try, and you can trade a lot, and you can always be a trader. And the good thing is, when you stay longer and longer, you will be discovering a lot of things and correcting your mistakes, and this is the best thing you can do. Okay, the best thing you can do is when you correct your mistakes and you delete all these things that doesn't work in your account, and that's it. Okay, so please now, if you have any more questions, please ask, because we are at the end of this session. It's 3 hours and 31 minutes. It's very good. So I will be stopping soon from this live session. And thank you very much for all you guys, especially Polo, who has written a lot in this thing, and it's very good. It's very good thing. Now, if you have more questions, please. Oh, okay. You put 30,000. Thank you very much. Now it means for me, you give me all the information that I need. So when you give me the percentage, you have a bigger account that you are using, and which is very fine, no problem. Thank you, Polo, for your discussion, and don't be mad at me. I'm just trying to explain things here. See, VJ, I am always at Saturday 11 p.m. Eastern Time. Please check Eastern Time. It means New York time. If you see the time, okay. And if you want to review again what we have said, you can go just tomorrow. You will find the session and you find the questions. Thank you very much, Cheaper and VJ and Polo and all the other guys who have been waiting and who have been listening to me. Thank you very much, and see you next week. And I'm always posting videos. Please watch them as always. And thank you very much, and see you next week.